Welcome to The Author Show, where we feature new authors and books, from fiction to self-help and everything in between. You'll find it all at theauthorshow.com. That's theauthorshow.com. And now let the show begin.
Welcome to The Author Show. I'm Danielle Hampson, your host. Before I bring in today's guest, a quick reminder that selected interviews on The Author Show are available in our iPhone app, which can be downloaded in the App Store, as well as on TV, on the Roku channel, and Amazon Fire TV. Our app name on all platforms is simply The Author's Show. Now, going to my guest, who with over 25 years experience in multiple asset classes and investment disciplines, is the founder and chief investment officer of ETF Portfolio Management, and he is very well versed in managing extreme market volatility. His name is David Kreinces, and he is the author of Investable Benchmarks, a guide to ETFs, technology, and leverage. You will find out more about David at ETFpm.com. Welcome to The Author Show, David.
Thank you, Danielle. Great to be with you.
David, without giving anything away, would you please give us a brief synopsis of your book?
Sure. Investable Benchmarks explains great investment portfolios in a very simple and fun way that everyone can easily understand and enjoy. It's got great pictures, large font. It explains the most important lessons to share with everyone, from the novice beginner investor to the most sophisticated finance professionals.
Who did you write Investable Benchmarks, a guide to ETFs, technology, and leverage for specifically?
It was really written to better protect and grow the wealth for all investors, but it's most valuable for smaller investors and people, with financial insecurity, because people struggling to get by have less money, and they need leading solutions like the Investable Benchmarks far more than affluent investors. That said, our firm has a $250,000 minimum for new clients, but the Investable Benchmarks book shows everyone how they could do most of this themselves very efficiently.
So when you say small investments, do you have like a range?
For smaller investors, the Investable Benchmarks can be used for the smallest amounts. You could put as little as a few $100s into the Investable Benchmarks. But the book and the website, investablebenchmarks.com, is really a great resource for smaller investors. But obviously, working directly with investors, we have to have higher minimums.
Yeah, no, of course. Now, David, you are not the first one to write on ETFs. What makes your writing different from others?
Our book is really the first, or among the first, to explain how, over the past decade, strategically balanced portfolios with just two leading index ETFs and a small, moderate amount of leverage has delivered a return over 4 times the S&P 500 with far lower risk. And people know that technology has disrupted most industries, and the new Investable Benchmarks are priceless, and they're showing investors that most investment portfolios today are very outdated. They're using structures that are old technology, like a rotary phone.
Right.
And there's just much better technology out there. And the Investable Benchmarks show you how to upgrade your portfolio to the latest technology and trends that are still new for many investors, but, it's good to be early.
Is that typical of the industry, to be behind the technology? Why has it not updated everything?
Well, it's always the early adopters who engage new technology first. And when investors see how effective this is, they're going to want to come along very quickly. So we're really explaining this as broadly as we can, because it's just priceless for folks.
Yeah. The stock market has had an incredible boom until the coronavirus hit us. How can investors protect themselves in this market crash?
Well, 3 easy steps for investors to protect themselves. First would be to stay balanced. Allocate your portfolio to a 50-50 mix of the top stock and bond index ETFs. You rebalance annually, and you gradually raise cash when it gets too bumpy. But when you put the equity piece in place, you want to use either the S&P 500 or the NASDAQ 100. Those symbols are VOO and QQQ. And on the bond side, you want to use long-term treasuries. The symbol is TLT. And the bond piece is really critical because long-term treasuries is the bond fund that has delivered the best protection in crashes. 2008, the first quarter of this year, the European debt crisis in 2011. So long-term treasuries are the best protection. And when you're 50-50 balanced with long-term treasuries and either the S&P 500 or the NASDAQ 100, you get a very smooth return stream. Over the past decade, when you use the S&P 500 in long-term treasuries, the worst calendar year was just minus 4%. So that is a level of risk many investors can take. And the annualized return was 11%. So it was a very strong growth return with very low risk. And that's what enables a very moderate, small amount of leverage to amplify those returns. And the investable benchmarks show the unlevered version as well as the gradual use of leverage.
Buy low, sell high has always been the rule. What should those who think of investing do at this time?
Well, I think the first step for everyone is really to read the Investable Benchmarks book, read the website, subscribe to ETFDM's monthly market updates, because the longer you watch these strategically balanced index ETF solutions, the faster you have the potential to earn a free retirement nest egg.
What do you mean by a free retirement nest egg?
When you have this very low risk balanced core portfolio and you apply small amounts of moderate leverage, the leverage amplifies the return. And it's shocking to see that just over the past 10 years, investors had the opportunity to earn literally 2 to 10 times the return that they had traditionally earned, and to do so with far lower risk. And that's really the combination of benefits of advanced technology, is to have improvements with lower cost and lower risk.
Now, the stock market has recently been, as you well know, we all know, because we've been watching the news, on a gigantic yo-yo ride, and understanding that nothing is ever 100% safe. Since risks are inherent to financial investment overall, how safe are our investments?
Most investments have risks that people don't understand or underestimate. In the second chapter of the book, we explain 3 legendary quotes about investing that basically say, expect the unexpected, adapt efficiently, and be prepared for shocking situations. So we always remind people, past performance is never going to guarantee future results, and you always have to be prepared to cut off risk by raising cash when needed. But using the investable benchmark framework, investors can target a much lower core range of risk, and they can have a much higher unit of return per the unit of risk that they're taking.
So what's the best core portfolio, and how much should be in stocks versus ETFs?
The best core portfolio is a combination of long-term treasuries and the NASDAQ 100, so 50-50 in TLT and QQQ. This has been a phenomenal solution for the past 10 years. And when you look at this solution with the 3 times leveraged ETFs, it's really mind-blowing. The 3 times income and tech investable benchmark returned 35% annualized over the past decade, which is over 2,000% in total return, literally 20 times your money in 10 years. And this return includes a gain of 101% over the past 15 months, a gain of 9% in the first quarter of this year in a crash, and a gain of 84% last year. And the 9% gain in the first quarter of this year was 27% ahead of the S&P 500 in just one quarter, because the S&P 500 lost 19% last quarter. So the passive performance risk control combination, being balanced, staying with long-term treasuries, having a technology focus, and using moderate leverage if you're able, has just been phenomenal.
And should investors buy leverage ETFs?
Clearly, yes. You really need to do it right. So it's easy to mess it up. And sticking with the ETFs and the weightings shown at investablebenchmarks.com, rebalancing annually, using long-term treasuries for the protection, and then raising cash if it's an extreme environment are all necessary for the levered approach. But investors can always stick with the unlevered approach and do just fine. It's just, the leverage is like adding electricity to your technology. It's going to add tremendous benefits, but there's unlevered benefits as well.
You mentioned technology ETF. So in your opinion, which ones are the best and why? And of course, that can change sometimes.
Well, the NASDAQ 100 is easily the best in our opinion, because the NASDAQ 100 delivers the best combination of diversification and liquidity with extra exposure to technology. Many of the other technology ETFs are too concentrated, less liquid, and that generally equates to higher risk.
And what about bond ETFs?
And then the best bond ETF is the long-term treasuries ETF TLT, or the 3x version symbol TMF. And, again, TLT has repeatedly delivered strong gains when stocks have crashed. And this past decade, the 3x version TMF literally delivered over 7 times the return of the aggregate bond index, which is what many investors use for protection. And this year, for example, the aggregate bond index is up in the low single digits, around 3%. And TMF, last I checked, was up over 60 to 70%. So the value in the protection can vary greatly between these bond ETFs.
So for someone who would want to keep a rather conservative financial approach, would you say that the bond ETFs are the best approach?
It's really the balance, because there are times where even the bond ETFs are out of favor. After the crash of 2008, when the S&P lost 37% in the crash of 2008, long-term treasuries, TLT, gained 34%. So the balanced approach was ballpark almost flat. When you look at the 2009 return, long-term treasuries were down big, but that was after they had a massive gain in the prior year. So sometimes even a protective instrument like long-term treasuries can have a painful stretch, typically after it's had a phenomenal strong period.
So basically what you're saying is that when using the 50-50 kind of approach, when one goes down, the other one pretty much usually stays up, and at least it's an even wash.
Exactly, and that's the nature of balance. That's the benefit of the balance, is that you're protected against more environments.
What are some of the biggest mistakes that investors make when they work with their portfolio?
Well, the first is usually a lack of balance,
Yeah.
and that stems from the perception that you needed more risk to get more return. Now the understanding is you want less risk, a lower risk portfolio, and then efficient leverage. So in the past, without using leverage, you needed to take more risk, so that was an imbalance tilting towards growth. And that's one of the biggest risks many investors take. And then the second is using the wrong bond exposure, using the aggregate bond index for protection, or gold for protection, or whatever else people try to do for protection. But long-term treasuries has just consistently been the best protection. And then many investors have far too many individual stocks. And when you look at the performance of strategic indexing, let alone strategic levered indexing, you realize that taking company-specific risk is not advisable, even though the industry often recommends it. If you look at the Nifty 50 stocks from 30 or 40 years ago, you probably wouldn't want that many of them today. And if you look at the S&P 500 from 30 or 40 years ago, you could still own that comfortably today. So it's much better for folks to identify the best index ETFs to own long-term and to pass to the next generation, rather than to try to outsmart the indexes or outsmart the market, which many investors simply can't do.
David, will you share with us an excerpt from your book, Investable Benchmarks, a guide to ETFs, technology, and leverage?
Thanks, Danielle. I'd love to. I have 2 really short ones if I could.
Sure, go ahead.
The first one, the conclusion of the book in the 10th chapter, or actually I'll start with the first one in the introduction. The first, in the introduction, we say, Nobel laureate Harry Markowitz said, diversification is a free lunch. And this book shows that leverage diversification can be a free retirement nest egg. And that's really the quote we want investors to remember the most, is that leverage diversification can be a free retirement nest egg. And that's just the power of using a safer portfolio and having more of it to amplify your results. And then in the concluding chapter 10, we start off with the phrases, many successful celebrities and entrepreneurs often say they must adapt to succeed. In fact, Charles Darwin helped us learn that it's not the strongest or most intelligent that survive, but those most willing to adapt. People that understand this reality monitor a range of investable benchmarks and update their core portfolios in baby steps. And that just is saying that there's always innovation, there's always new technology. You definitely want to monitor that evolution. And as you find effective new solutions, you want to take baby steps and reward success. And that's a great way to migrate to the new technology safely.
Yeah, the fact that we're having more innovation is kind of the understatement of the year because innovations are coming faster and faster with the advancement of technology. So at the end of the day, David, what benefits will your readers get from reading your book?
Well, I think it's priceless for investors to learn that the growth trends in technology and artificial intelligence are really mind-blowing, and workers are increasingly being disrupted or replaced by automation. And the best defense that workers have against being displaced by automation is to own the global technology complex efficiently. And if you're not an owner of the global technology complex, you're going to have a hard time keeping up financially with changes in the global economy. So when you look at the returns that investors have gotten from balanced, diversified exposure to global technology, it's very clear that this is a critical lesson for all investors to learn.
And at the end of the day, what is the central message that your book conveys?
I think the central message is that many folks understand or believe that Einstein called compounding the eighth wonder of the world. And learning the right way to employ this math in your investments is just one of life's most important lessons for you and your family. You know, change is constant in life, so just be prepared to adapt and protect and grow your assets long term.
Yeah, adaptability is definitely key. So in your opinion, David, who should read Investable Benchmarks?
It's really everyone, Danielle. The book is just critical in maximizing your investment results. It's a make or break for your long-term financial freedom, your business confidence, and in some respects, your overall household harmony.
And last but certainly not least, where can readers find more about you? And of course, where can they purchase your book?
Sure. Everyone can find me at investablebenchmarks.com or ETFpm.com. And of course, our book is available at major bookstores and as well as an electronic version in the Kindle version.
Okay, wonderful. David, thank you so much for spending some time with me today. And if and when you release your next book, will you please come back again to share it with our audience?
I would love to. Thanks for having me, Danielle.
Thank you. Now, I will close with a compilation of a couple of book reviews on David's book. Quote, most investors are unfamiliar with leverage ETFs or how to use them correctly. Fortunately, Mr. Kreinces provides essential guidance on how to incorporate these products into a portfolio, manage risk in the process, and structure a sustainable long-term strategy. This is the first investing book that I have read that did not put me to sleep. The way David explains leverage ETFs and how to use them in daily investing is a real eye-opener. The book is a must-read for anyone who has a portfolio and wants to learn the beauty of using leverage ETFs. End of quote. Investable Benchmarks, a guide to ETFs, technology, and leverage is the title of the book by author David Kreinces. Go out there, buy it today, and please share this interview with your friends so that they too have the opportunity to discover our guest and his work. And remember, The Author Show may be accessed at any time at theauthorshow.com. Plus, selected interviews can also be found on major platforms like Amazon Fire TV, the Roku channel, iHeartRadio, Spotify, Google Play, and many more. And whether you are an author who would like to be featured or a reader in search for new books to read, theauthorshow.com is a great place to start. I'm Danielle Hampson. Thank you for listening. Until next time with another author and another book.
Thanks for listening to The Author Show. Find out more about authors and their work at theauthorshow.com. Theauthorshow.com. Tune in next time to another great author on The Author Show.